Rack it up, I got a bit of the bank to make me a safe house. Shake it up, she got her hands on it. Good morning. So Seva, we're starting now. So you're asking if this price action is active. So I drew a little chart here. Hopefully you guys enjoyed my artwork. The artwork says XRP daily right up here. Then I was talking about this support level. You see that support level? And then I talked right here about this bullish candle. You see these moves are pretty big. It went from like 84 cents all the way up to 124. I mean, that's a big move for such a small thing. But this is XRP. So let me clear all that out. All right. And we can take a look here. This has been a bullish engulfing candle. And so we can trade this a couple different ways. It's breaking out of this level right here. You can see that this is like the current level, and it broke out, and now it's retracing. So let's actually dive in now on a lower time frame and see what this looks like. Okay, so you can see it broke down here. It broke up. It is retracing. It looks like it might have a little bit of something here. Let's pull that back a little bit. You can see that my trend line might have been off a little bit. Let's see. So this trend line is a little more on point, okay? Just because I drew it on a daily, and sometimes that happens that way. Look at that. Ooh, 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 ooh. Okay. So yeah, so the expectation here is based off of that big bullish candle that we saw in the daily time frame, was that we might want to go long, right? I'm pretty excited about that idea, but look at what's happening. Okay, you can see we're in a channel, right? And it's pulling down. The last time we were in this channel, we had a really nice signal right here. You guys see that? That's actually a beautiful, beautiful signal. And I did a video on that signal actually not too long ago. And so we're going to be looking at that as well. So watching here. So there's two options on this right now. There's two options. There's this option, which is to wait for this. If we get a pin bar, another piece of price action, and then price coming down here, right? That's an option. And then there's another option, which is a breakout and a pop and a go like that. So right in here, we got some time to do whatever we want. Right now, I'm not doing anything. I'm just not going to do anything right now. If we were trading on a daily time frame, though, if you were a swing trader, you could do this. You could say, okay, and I would still wait for the day to close. It's the beginning of the week. You could be like, okay, well, we have this big bullish candle. If it closes above this, then I would just take the trade, right? And I'd put my stop down here. It's a pretty big stop, but if you want to go all the way back up to the top, it could be a 1-to-1. So it could be a decent setup right there. Okay, so yeah, so that's that. Good morning, Chris. So right now, I like this channel on this XRP, and I'm going to be watching this. I think this is almost a perfect trend channel, and it's hard to find these. Like this is like it's easy to find channels, but it's hard to find like perfect ones, and this one is about as perfect as it gets. And so we know that if we follow our analysis properly, we should be able to just ride this one out and trade it according to the pattern. Because right here was a pattern. So I'm going to be watching this trade and see whether it breaks to the upside or whether it breaks this to the downside. So either way, we got a pretty good setup happening right here on the USD XRP. Or XRP USD rather. Pretty solid right now. Right now it's in a period of indecision. So it's just pulled back off of this. And so the shorts were able to push it lower. If it does break this level here, if it breaks down through here, I think we actually could see a target all the way down here at 73. So right now, it's looking like it might want to do it, but we got to get a little more confirmation. Got to get it. It has to break below this trend line. So we get a nice, strong bearish candle below here. Good morning, Alan. How you doing? If we get a nice, strong break below there, I think that could be a great entry. Okay. So with that being said, let's take a look at let's keep looking. Let's look at Bitcoin today. Bitcoin is very similar because it's crypto. Let's look at Bitcoin. Okay, so we're going to look at the daily time frame on Bitcoin first. All right, and it looks almost the same setup, huh, guys? You notice that? Big drop and a big bounce. So how many of you have been holding some Bitcoin? You guys have made a little money this morning. But it did break this channel. Okay, and so I would say that we have a possible, if we got this bullish engulfing candle, so I would say that 60,000 is probably the next target. And when it gets there, we have some resistance areas to really watch out for. Right here, okay, 60,000, the top of this trend line. So I would anticipate a possible head and shoulders, right? So we got the shoulder here, the head, and then what would happen? Boom, right? And then we got the neckline, and then boom. I've already talked about this, so some of you guys might have seen that, but that's a possible scenario here on crypto, on Bitcoin. So I should take a picture of this and see how good I am at telling the future. Okay, I'm actually going to do that. Let's draw the neckline. Boom. And I'm going to type this in, BTC prediction. Okay, that's my BTC prediction. Now, of course, it doesn't really matter if I'm right or wrong, but it's just what I'm thinking, right? So, so I'm going to take a picture of this and see if I can see how well I am and see how well I do with my predictive skills. I could be way off and Bitcoin just cranks right through that head. Instead of a head and shoulders, it could be just a trend continuation. I'm going to post this just to see how crazy I am. Oh, wait, it didn't. Okay, so I posted that on Twitter so you guys could could follow me to see how well that ages. I'll post it in the chat as well. There's my my Twitter status. Good morning, Ben. And so I could be way off as always, but that's my prediction on Bitcoin. And so we'll see what happens. Another option on it, another option on that is this. And so maybe I should just post two predictions. If I post two predictions and then I go back and one of the two happens, then I could just say, look, I was right. You know, and then everyone could, I could change my name and I could be called the Market Oracle. But here's my other prediction is that we break this, we start a new trend channel here, breaks this, and then comes up to the moon, right? That's my second prediction. Okay, so that's prediction number 2. Bullish scalping on gold. Let's take a look at gold because I love bullish scalping gold. I was going to look at, I just did XRP. Now first I did XRP. Now we're doing Bitcoin. And so just on a trade setup here, if this closes above, I would maybe do a long-term buy on it. And you know, my target's about 60,000 short term. And then let's look at it on an hourly before I start looking at gold. So we got Bitcoin on the hourly time frame, very similar to the XRP. It looks like we might have we broke through this trend wall here. So it could come back down and then pop. But we have made a nice move. We might see some kind of retrace. Look for it to maybe get back in long at some point. So that's that. And let's go ahead and take a look at gold. Everybody want to see some gold? Okay, and you know what? I'm going to change my template here. Well, let's just do this. Okay, that's actually looking really nice. This is looking really nice. Okay, this is an hourly, and look, it's right into support. It's right into support. Okay, I like this trade. We got a little wedge right into support. We know that it's strong. We can just see what's happened here. Every pullback, we've had opportunities to go long. Every single one of these. There's a trade here, 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 here. So here's the thing about this. This is why you don't ever want to have FOMO. You don't ever want to have FOMO, right? FOMO means fear, and I'm not going to type that. It means fear of missing out. But we don't ever want to have that because there's always another trade, right? So we have some really good support level here. Nice bullish price action. If we get a break, look for this thing to go up to 18. I was actually looking for 18 earlier and it didn't make it. I was actually looking for 1805 on Friday and it didn't make it. It got rejected with a triple top right here. You see 1, 2, 3, triple top. And it just crashed, but then now we're kind of in a holding pattern. We're right here. So, you know, this is a nice pin bar and nice bullish candle, but it's still, we're not out of the woods yet. We could get, because this is that little consolidation pattern. We had a fake down and maybe we go like that. So maybe that's what we're going to see. I do like the bullishness of this one. I think that gold could be a great trade. You guys know that I have been looking for gold in a while, but right now we have a nice 2-day pullback, which when you're in an uptrend, a 2-day pullback is a good thing. It might not be over, you know. So right now I'm just watching XRP for a break to the downside or a break up. Still watching this one. I'm going to be taking that if I get a chance. I'm going to be watching gold. I'm going to be watching gold for setup as well. Wait for a break up or a breakdown. Either way, I'm going to be watching those. Yeah. Yes. So Ben's taking some aggressive entry, conservative entries, just waiting for a little bit for the pullback. We could actually pull this back a little bit and draw this line as well, which would cover the conservative entry, 1788 right here. But let's pull this back a little bit more. We have this bullish channel. They're still not totally out of this channel. We're still in the pretty much right in the middle of it, right? So right here, this is what I like actually. So we got 1831, an initial target is right up here to 1805 where we have support up here, but the top of this channel is another thing. If we get here, we don't know what's going to happen. It could pop down again. We could have one more leg. Obviously it could keep going down for years, but I'm thinking we're going to break out of this channel at some point. But we could hit up into this area and then come back down here and then back up here and then break out. I just draw these patterns. I'm not a fundamental expert. I just draw these. Well, and when I say I'm not a fundamental expert, I know some stuff. Yeah, this is gold, Linda. This is gold. You should just be able to analyze the chart and see the patterns, and it should instantly tell you that it's gold because you're so familiar with the charts. Just kidding. Just kidding. But because there's a lot of patterns like this, not just gold. But yeah, this is gold. I don't have my template up today because we're just doing straight up price action. Today's a special. Today, we're taking away the tools, we're moving the blinders, and we're just focusing on price action, right? So that's why I don't have the markings on, because this is just straight up price action today. We're doing a special patterns training. So, yeah. Yeah, you got to have it memorized on every time frame as well. No, this is daily. This is daily. Okay, so so right now we do have a down. It is moving down, right? You can see that the trend is down. Overall, when we look long term, it's up, but right now the current move is down. And so every time, this is just like what I talked about on Bitcoin. Every time we got up here, what was the trade? It was short. We get up here, what's the trade? Short. We get up here, what's the trade? Short. So don't think that we have a nice little bullish move that short trade is out of commission, right? Actually, the pair's not there, Ben. The pair will not be there. I will hide my face all day long and you still won't see it. Dun, dun, dun. I guess you could see it there, but yeah, it's still not there. The pair is up in the top right or down here, but it's kind of hard to see because it's tiny. The reason you can't see it today is because I have to apply my tools, and we can apply them. Let me put my tools back on. Here's my tools, and there we go. Now we have tools, and I have two of the same tool on the same chart. That's not good. Let me see this. That was odd. Okay, so the tool that I have will show it on the chart. The tool will show, I just got to get into the settings. Okay, there we go. Now it's on. All right, so there we have it. We got everything set up. The tools are running, and we have that. So, but anyways, my main focus really is I wanted to just go over some price action patterns. And so it doesn't matter, to be honest, that's the reason I just remembered why I didn't have the tools on, because it doesn't matter what pair it is. If we're just studying price action, it doesn't matter what pair it is, because all the price action patterns will be the same. So with that being said, let's pull up a new chart and just go over some of these price action patterns. So I'm not even going to tell you what this is, and I'm not even going to tell you what time frame it's on, because it doesn't matter, right? It just doesn't, because we want to learn how to trade these patterns. So right now, this is just a random pair on a random time frame, and we want to look at it from a fresh point of eyes. How are we going to trade this, right? We don't have any tools. We got no RSI, no MACD, nothing. This is just straight up charting. Well, the very first thing that I want to notice, right? The very, very, very first thing is the trend, okay? This is a very strong trend, and it's really, I didn't know what I was pulling up, but this is really beautiful, right? This is a beautiful trend, okay? So that's the very first thing that we're going to notice, is that we had a breakout right here, okay, back on April 5th, and it's been trending for about a month, right? And I don't know how far back this trend goes, because that's it. But also we're a channel, right? So we're at the channel, and right now we're pretty much right in the middle of the channel. And you don't, and this isn't about price action. I'm just getting an idea of which way the charts are moving. So you can see it's been in a very structure. We talk about structure. One of the things about patterns that's really important is trends are important, but structure is really important. And if you can find a trade that has good structure, then you're in good shape, okay? So structurally, this is a really sound move structurally, because it's moving in a nice, steady, smooth flow. And it's very consistent, and it just responds really well. Okay, so what we want to see when we see that, there's different price patterns. So let's take a look at some of the different price patterns that have developed on these charts. And the thing about price patterns is they're easy to look at in hindsight, because it's just so easy. You want to get yourself trained to finding them in hindsight, but you also want to get yourself trained in tracking how they respond. So let's take a look at some of these. So if we're in an uptrend, the way that my favorite way to trade, and it doesn't have to be this way. You can find counter trend price patterns, and you can also find trending price patterns. But what you want to look for is for things to go in the direction of the trend. Now, one of the things that we can see, there will be price patterns that fake you out, right? And so you want to be able to see the bad patterns as well as the good ones. Don't just train yourself to see the ones that work. It's really easy for us to go back and find all of the working patterns, right? And we write them all down, and we're like, look, this one worked, this one worked, this one worked, this one worked. It's so easy. It's almost like you get blinded to the bad patterns. It's almost like you're blinding yourself to the ones that don't work. And you're like, oh man, these patterns are great. They're amazing. Look at pen bars. Pen bars always work. But the problem is, that we need to see the ones that don't work as well as the ones that work, so that we can be objective and try to learn and really analyze. Because if we're only going to see the ones that work, it's not going to help our trading. So right off the bat, I want to look for patterns that don't work, right? As well as ones that work. So I just saw one here. Look at this. This is a short trend. It bounced off this trend line, okay? And you can see it's a tweezer pattern, right? It's not perfect because it didn't quite close the bullish, but then the next candle did. So if you were doing some scalping, you probably could have made some money on this, because it ended up going, it still went like 15 pips. So if you're scalping, you could have made some money, but more than likely you're going to lose money. So this is a bad pattern, right? But again, this was counter trend. right? That's one of the reasons why I like to stick with the trend, because I have found that when you do stay with the trend, the patterns line up more often. Now, here's another one right next to it when the pattern works. So sometimes you'll get a pattern fake you out. And then, just like I was saying before, when I talked about the pattern where you get a consolidation, a break, and then a move, patterns will do the same thing. And that is a pattern. It's a consolidation pattern, but I mean specific candlestick patterns when you're just looking at like two candlesticks, right? So, and here's one. You get, this is two, kind of like a tweezer, twin tower type pattern. You got a green candle, then you have a bullish red a bearish red candle. That's a traditional short setup, right? But it just faked down. And then the very next set of candles, we got a strong red one and a strong green, which is a reversal. So if you got faked out here, that's okay. You could take a loss. And this is why risk management is so important. And the next trade would have been really solid, because this particular pattern, right? This particular pattern is, this one ended up moving 45 pips in your direction. Okay, 45 pips, not bad, right? So now we look at some other patterns. Let's look at another one. We have a pin bar, right? A pin bar. And so a pin bar is when price retreats really heavily, and then it comes back and gets rejected, right? And that's an indication when we see this, but all of these mean the same thing. And another thing that you'll notice is on one chart, charts will show different patterns at different times, right? So I'm trading with this broker, and you're trading another broker. We might have the exact same charting system, but what we need to see is the exact same thing. And it doesn't matter what specific pattern we have, it matters what the candles are telling us. Okay, so let's just use this as an example. This is a pin bar, right? You see that's a pin bar. The price got down, and what happened here is it got rejected really hard. Price got really hard rejected, okay? So with that being said, that's an indication. Okay, the shorts were trying for a breakout. Everybody sees this trend wall, right? And everybody's like, okay, the trend is officially over. They're like, okay, we got a head and shoulders. We got shoulder. We got head. We got shoulder here. And then now here's the neckline. And everybody's like, neckline time, head and shoulders, game over, right? And this is why these head and shoulders, everybody's like, look at head and shoulders. 1, 2, 3, right? Head and shoulders. We could say that this was the shoulder or this was the shoulder. Again, it's interpretation because it's not perfect. None of them line up perfect. This could have been the shoulder. Anytime you got to pull, and then this is the neckline here. But in hindsight, I'm looking at this. If I was trading, I might have said that this was a head and shoulders, possibly. It's not a perfect scenario, but when you're looking at charts, it's not always going to be perfect. And as a matter of fact, most of the time it's not. But anyways, I'm just going back. People were thinking, oh, it's short. Boom. Everybody's going short. We get short, short, short. And then all of a sudden a hard rejection. And that's what a pin bar is indicating. A pin bar is indicating that there's a hard rejection. And, Ben is getting me sidetracked. He says he wants to see my face. Okay. Well, Ben, you want it, you got it. Now, here's the thing. Ben wants to see me. Okay. Now, oh, that's so funny. Ben wants to see me, but now the rest of you are going to be furious. They're like, no, take the camera away. So for those of you that want the camera off, just let me know and I'll turn it off. And then when Ben wants it back on, he'll turn it back on. Okay. So I'm easy to get sidetracked. So focusing, this is just an indication that price was changed directions and that there was a fake out here. They were able to get all of the sellers on board and to shake them out of their position, right? This is where what we want to see is we want to see all these people get shaken out. So one thing you want to remember though is the price the candle pattern that you see, there's a pin bar, but you could also get one of these patterns, which is like the Twin Towers or the tweezer pattern. You could get one of those. All we want to actually see is that price is being rejected and that there's a reverse in price, right? So we have support holding. So we have support holding, and that's a really important part of this, right? You want to make sure that there is a good support level or resistance level that is holding. So when you combine these patterns with support and resistance levels, and then you manage your risk properly, you get a nice 2-to-1 risk to reward ratio or 3-to-1. It's really good. So in this particular setup, we have a pin bar happening, okay, and we have support. So what would I be doing? I would probably take the trade. If I was trading this, I would probably take the trade right here as price was crossing above. And so I would take it about 120.10. 120.10 would be my entry. My stop loss would be 190.89, which is about a 21 pip stop. And this actually ended up running 100. So that is a 5-to-1 risk to reward ratio, right? A 5-to-1 risk to reward ratio. So if you can get, like, this is legit, this is real. If you manage your risk in such a manner, you do not have to have a high winning rate at all to make a lot of money on trading, okay? And so let me actually prove that to you. Let me prove that to you by pulling up a chart, right? I'm going to pull up a chart for you guys to show you how this actually will work, okay? So this is a chart that I use to help me, okay? And this is really important, okay? This is really important. And I'm going to actually try to make this a little bit bigger. See if I can do that. Okay. All right. So let's just say that we hit a 5-to-1, right? A 5-to-1, like that was a 5-to-1 trade. Okay. Let's just say that we hit it. Okay. So we can just change. I have built this so you can just change it. So the risk to reward is 5-to-1. So if we're risking $200 and we take 100 trades, okay, 100 trades. Can everyone see that? Okay. And we have the 5-to-1. Look at what our winning percentage. Okay. Our winning percentage only needs to be 20 out of 80. 20 out of 80 trades win, and we still make $4,000, right? Now, if we can get our winning percentage up to 30%, we're 16,000. So this is a situation where it's all about actually managing your risk to reward. Now, I'll admit something here. It's really hard to hit 5-to-1. Okay, it really is, because the market is faking. Right? We talk about those fakes. It's faking people out all the time. It's really hard to do that. But even if you get 2-to-1, you still get 40. It's all a bit based on the win percentage and the risk to reward. So the higher your risk to reward, the more money you're going to make. You can see out of all of these columns, which one makes the most money out of 100 trades, right? It's the 5-to-1. Right? It's by far the most money. The problem is, there's a big problem is, and this is a problem, but you got to think a little bit, think about how to solve it, and it's your winning percentage. The higher your risk to reward ratio, the harder it is to have a high winning percentage. So if you get 100% or 95% and you're getting like a 0.5, you might be risking 10 pips and targeting 5. If you get 95%, you're only making $8,500 after 100 trades. And so if you're scalping, and you're taking 100 trades a day, well, this will work, right? But so I'm not saying it's not possible. It just takes a lot more work, right? Because you got to take a lot more trades to make the same amount of money, right? But obviously, when you're doing a 5 to 1, you're not gonna win that. You're not gonna win 95%. You can win 95% if you're scalping, but eventually, what usually happens is people let the trade get away from them, and they end up blowing their account, right? So if we look at this 8,500, you actually only need to win 25% of your trades with a 5 to 1. And it can be kind of a little stressless. Okay, so if we look at hindsight, let's go back. And obviously we say hindsight. Well, what's hindsight going to do for us? Well, you can do some back testing, but what is really important is to do real forward testing, right? To actually do this, follow your thing for 20 trades and see what happens, right? So in this situation, we can run a little back test. We can say, okay, let's look at this and see what we would get, right? So it's easy to do in hindsight, but let's really analyze. Remember, we were talking about finding the fake patterns. Let's really analyze and see what we would get, right? Let's do the real trading. So once we had a breakout, I'm going to be looking for buy setups. So I'm going to say that this was the breakout, and I didn't actually go back to see when it started. And it could have started down here because it was very bearish up until here, but once it hit. But anyways, we're going to run these patterns, and we're going to see how well our strategy would have actually worked, right? That's what the importance of back testing is. That's right, Ben. You only need to be profitable 20%. You have to be right 20% of the time. So one of the things is you can do a combo of the 5 to 1 is you can, tighten your stop, and maybe some trades will be 2 to 1, some trades 3 to 1, some trades 10 to 1, and then even some trades you can get like even further, like a 10 or 15 or 20 to 1. You can get some just incredible return if you allow a trend to really move. Now, that doesn't happen all the time. It's actually really rare, and it takes a lot of discipline, but that's how it could work. So let's take a look at this. So in this case, we would have the price broke out, and this is a pretty interesting price pattern. I would say that my initial entry would be right here, okay? And I do entries in two different ways, but today I'm just going to talk about price patterns. One way I do them is with the trend line break, and so I might have done a trend line here, okay, and got in, but either way, it's almost the same entry. This is this bullish price candle, this one. You see this one? This big one, big bull, big green bull, that would have been my entry. So my entry would have been right here, okay? My stop loss would have been right here. So let's look at this, all right, in hindsight. And trade number one would have been 27 pip stop loss. Now, where would I have gotten out on here? I don't know. We might want to look back to see where the support levels are, right? We always want to use support and resistance. And so I might have targeted right here because this is a support level, and it did pull back and into that level. So if my entry, let's zoom up again. Those lines don't mean anything now because they moved. My entry would have been here, 27 pips, and might have been targeted at 51 or maybe up here, 90. I mean, you don't always have to target at a support and resistance. You can just let the trade run, right? And we could talk about trailing stops as part of this, right? So in this case, entry would have been here. And then once I hit a level, when you hit a level, you definitely want to tighten your stop. So the question is, where do you tighten it? You move it to break even here, BE. The problem with doing that is we already hit a 2 to 1, right? We hit a 2 to 1 here. And now if we move our stop to break even and it comes back down, which happens a lot. I mean, this actually happens a lot, right? And so now we get a loss, and we had a 2 to 1. And we know if we get a 2 to 1, that's a really good good trade. A 2 to 1 is great. And so moving your stop here to break even, in this case, it would have worked great. So in hindsight, I'm always trying to figure out what's not going to work, right? So in hindsight, man, this is great. I just moved my stop to break even, and then it comes out and it takes me out here, right? And I hit a 3 to 1 instead of a 2 to 1, right? So this could have potentially been a 3 to 1, but it's all about the trailing stop. And in this case, it can be really hard to do trailing stops because if you look how deep these pullbacks are, right? These are pretty deep pullbacks. And so that makes it difficult. So I'm just trying to explain the challenges with this rather than just paint it as such an easy picture. There's a lot of analysis that needs to come into here and a lot of thought, right? And that's why, slowing down and just writing your ideas, even getting offline, writing your ideas on paper, even printing some of these charts and looking at them. One of the things that I like to do is to sit down and just think about how I can do things better. Because if you're just in the moment and you're just working in the moment without thinking ahead, you miss a lot, right? Because thinking in the moment can only do so much. But if you slow down, you remove all your distractions and you think about this, like how you're going to move how you're going to do things. Think about the risk to reward ratios. Think about how one little tweak to your strategy will make a difference. Those things is what's really going to help you, is taking that extra time to do additional work that other people won't do. Okay. And that is what's going to put you to the next level, because most people are not going to do that. Right. And I know that those of you that are here with me that are listening, a lot of you are probably like, yeah, he's right. I'm not doing that. That's a waste of time. Right. And you can say that, and that's okay, right? You go right ahead and say that, because that gives me an advantage, and I'll take that advantage, right? I'll take that advantage anytime. So that would have been one trade, a possible 3 to 1. Where would another setup be? Well, at this point, I like this. I wouldn't be able to have this trend line. I wouldn't have the benefit of this, right? So this wouldn't be in existence yet. So if we take this, we remove this trend channel that we now see, okay, and we go back and we go by what we do see at the time. When you're doing your back testing, you want to go by what you're seeing at the time. So don't back test with all of the lines on the chart, because you want to be able to get through the thought process on how you're looking. So in this case, okay, so right now I see this and I'm already looking in hindsight, but I don't see what was happening. So you want to back test it and only see what you're making your decisions on. So we know I made a trade right here, right? This was the trade. And now I'm out of the trade. I hit my take profit. So now I'm right here on the next trade. So I've got to try to figure out what to do. So I know that I don't have that big trend channel. I got a trend channel here, right? I've got this trend channel. So that's something to consider. And right here, what am I thinking? I've got a support level right here. Okay. And so remember, we're trying to do price action. So there's support here. It's been tested, but I could have a steep trend line, a really steep one that maybe goes like this. And then that broke to the downside. So that doesn't really help too much. And so I have a head and shoulders pattern. There's a shoulder, a head, and a head and shoulders pattern. So, at this point, I'm like, okay, we got a downtrend, but I'm really wondering what to do here, right? So when I go back and I draw that trend channel, it's like, oh, it's so easy. Oh, look, it's an uptrend. But that's easy to see now. But right now, what are we, if this is all we can see, is this, we got to make up our mind. What are we doing? What are we doing right here? This is a head and shoulders pattern. And am I going to go long right here on a break of this channel? Right? In hindsight, it's so easy. but let's actually make a decision on what we'd actually do. So right now I have a head and shoulders pattern. I mean, this one's pretty easy. This one's pretty obvious because we broke an uptrend. We got a pullback. We had a price action candle, right? So with that being said, right now I'm not going to take this. I might be looking and thinking short, honestly, because we had a big move up. We're getting pushed back. We got a pin bar here. We got a push here. We got a head and shoulders. I'm thinking lower. Okay, but now instead, look what happened, right? So at this point, would I take this candle? I would say yes, right? I would say yes, because here's why. And again, it's hindsight, and I already know, but here's why. Because we have the fake. Remember we talked about the reversal earlier and the change of direction? So in this case, it actually is a fake out. So I'm thinking head and shoulders. So if you're thinking head and shoulders and then it does something other than what you think, that's when you might want to take the trade. So in this case, I'm thinking head and shoulders. I get this big bullish price action candle. So I would probably take this because it was a wedge and it broke out and the head and shoulders didn't develop. It was a fake. So that's a note, right? And so when you're doing a back test and you're testing price action patterns, write out notes and say, the head and shoulders failed, but there was a bullish candle that worked. Keep an eye out of how many patterns fail before the real pattern works. Remember I said you'd be looking at the failure patterns, right? And so you might get to a place in your trading where you like only take the second trade because the first one fakes a lot, right? And that could help you become more thoughtful in your trading. And ultimately, that's where we need to be. Is we need to be deliberate, we need to be thoughtful, and we need to have a process. The best traders are those that take time to really analyze what they're doing and to think and to plan and to not just jump in, but to pre-plan and then post-plan, right? To pre-plan and post-plan. You got the PP, which is the pre-plan, and then you got the PP, which is the post-plan. Oh man, that's hilarious. Okay, so in this case, so that would be my setup. Now, again, we got to deal with the problem. You know, when you're doing back testing, you got to deal with the problem with take profit, right? So if I did get into this, well, I got a stop loss here, but where am I going to put my take profit? I don't know. My stop loss, my stop loss is right here. Okay. Again, 21 pips, very similar to the last one, 27. But this move was now, it turned into a sideways market. So in hindsight, we are looking at this thing and it's just pure beauty. It's like, oh, this is a great uptrend. But in reality, when we're trading it, it's hard to figure out, right? And that's what we need to realize, that things are not as easy as they look when you look in the past. So, and that's why trading is harder. And that's why it fools so many people, because it's like, oh, that's an uptrend. It's really easy. But most of these patterns are going to try to take you out. And even when you get it right, you, I'm glad that someone likes my joke. Thank you. Or anyways, even when you get it right, you're wrong. That's really frustrating, right? And that's the other part, is the mental part, right? So I get this trade right. This thing goes up. It moves up a lot. It moves up 40 pips. That's a 2-to-1. I got a 20 pip stop loss and a 40 pip take profit. That's 2-to-1. And so let's go back to my chart. 2-to-1 is on point, right? We're risking $200. We take 100 trades, 2-to-1. If I get 50%, that's 10 grand, right? That's on point. Okay. That's on point. Now we know that in looking at that chart, we had 2 trades, both of them easily hit a 2-to-1. So when you look at it and you start analyzing the data, maybe you start out and just test 2-to-1 and see if you can hit 50%. Okay, because even in an uptrend, this is not a guarantee, because let's look at the next trade. So here I do a 2-to-1. Okay, Well, now I got another setup. I'm waiting. Okay. And here we go. We got a setup. Price action. We got this bearish candle here, a fake out, price moving lower, and then we get a bullish candle. So there's two thoughts on this. This is what is called an inside candle right here. When you have a big bearish candle and then you have a little tiny green one like that, that's called an inside candle. And I'm not going to take a trade on that. Some people do take these, okay? And that would have been a setup. But I don't do that because a lot of times an inside candle is also known as a pause bar. So we get a big move down, we get an inside candle, and an inside candle could change direction to the upside, but a lot of times it's a pause bar, it stalls, and then price will go like this. So it's either a pause to the up or it could reverse like it did here and move that. So I probably wouldn't have taken that trade, right? Because I don't take inside candles. However, I would have taken this. Okay, I would have taken this trade because we broke this level and it was a support level. So where would I put my stop loss? Well, I would have put it probably down here because I see that there's a pin here, but then I see this level, right? So if you see a support level as a pin bar, I like to put I like to analyze it, but I'm not going to put my stop here because I see this level and I know that if there's a level here, I know that price action is going to want to get back here. So I'm going to use my stop down here. So rather than just using this, I'm going to use it here. Okay, and so with that being said, let's take a look at this trade. I get in right here and I put my stop. That's a 46 pip stop loss. That's big compared to the other ones. And so to get my trade, I got to go, if I want a 2-to-1 now, let me delete all that. So here was my entry. So if I want a 2-to-1, I got to get all the way up to, up here. And did that trade work? Yes. Yes, it worked. Will it work every time? No, it will not. So, so here's a 2-to-1, right? So we got a 2-to-1 here, a 2-to-1 here, a 2-to-1 here. So we got 3 winners in a row. Now this one was a bigger stop, but had you have done you could have done this tighter stop, right? And again, you want to analyze this stuff in hindsight, but you don't, 30 pip stop, I would have made a lot more money, but you also will lose more, right? You have to remember you'll lose more. And so Xanax, it doesn't matter what time frame this is because I'm just studying price action. It doesn't matter the pair. It doesn't matter the time frame. It doesn't matter anything because I'm just analyzing price action. That's all, right? And so we could reverse this and look at this on any time frame. That's what I'm doing, right? So we can do this. It doesn't matter what time frame we're trading. Okay, so we ended up getting a trade, but one thing, there's another little technique that you can run in your trading, okay? And this is a really interesting, and this is called laddering or pyramiding, okay? And that's when you add a position already. So if you have this trade, okay, and you have your stop down here. So I entered right here, okay? I entered the trade. There's position number 1. Okay, and I do this quite a bit. And this works really well, okay? And you have this trend line, and you notice that it goes past here. So I like to watch these trend lines and see them bounce off the bottom, okay? So here's what I have. I've got support level. I've got a trend line support. And then I have a price action pattern right here. Okay, you see that? A price action pattern right here. So I'll delete it. And so my second entry, so I had my original stop here. My second entry would be right here. So I have an entry here on this breakout and then an entry here on this secondary breakout. It broke out. We got a nice bullish tweezer. And so this would be position number 2. Okay, 1 and 2. And the reason why is my structure, my trade structure never, ever failed, right? The trade structure never, ever failed here, right? Look at this trend line. This was a head and shoulders, okay? People were thinking it was a neckline. It didn't break. The neckline didn't break. And so because of that, I can still add into the position. Okay, now, if I'm going for a 2-to-1, Well, I still have even a third position here, okay? And I keep my stop loss at the same level, right? This third position would have entered right here, okay? So what would my stop loss been? Position number 2, the stop is 27 pips. And then on position number 3, it's 45 pips. Position number 1, the trade is 40 pips. So on all 3 of these trades, I've got 2-to-1 targets. And then what happens is I ended up hitting the target on all of them, right? And we could actually continue to do that. You can continue to do that. So when you got a nice trend and your structure has not broken, you can continually add positions because you're bound to get pullbacks and consolidation. The market's not always going to run in your direction. But if you're in a position and the structure's still in line and it still moves up, you can add to the trade. And if you do that, like if we did that, we got 1, 2, 3, like 4 or 5 positions and all 5 hit the target, right? And we look, they're all 2-to-1s. Well, we just did a back test. Okay? And we hit 7 trades in a row. This little back test that I just ran was 7 trades in a row. Now, I said it's very easy to do in hindsight. It's very easy, right? And you want to look at the failed patterns and the losers, but this is just literally, I knew I was going to talk about price action today, and I like to prep and to plan and to be prepared, right? I do like to do that, but I did not plan on what chart I was going to pull up. I was just going to go with whatever the first chart I saw was, and that's what I saw, okay? And so what we want to do now is do this in real time, okay? And when I come back, like we're taking we're going to redo our schedule. I'm not going to be doing these every Monday, Wednesday, and Friday. Starting next month in May, I'm going to start doing them once a month, but we're going to start maybe doing some of these in advance, okay? So I want to go back and look at the at some of the trades I was looking at. So one of them was, we look at XRP. This is XRP. Okay. We want to see, now we're doing what we just did. We're doing what we just did, but we're doing it in real time. Okay. So we're taking our training and now we're going to apply it in real time. So we have a pin bar. What do we have? We got a downtrend. We got a pin bar. We got a break to the downside, and then we got a bullish fake, right? So these patterns don't always work, right? We got a bullish fake pattern here, and then now it's coming back down again. So we broke this level, okay, and now we're retesting this upside, right? We're retesting this upside. Well, I appreciate it, Linda. Hopefully this will help you. The biggest thing is, here's the biggest thing, okay? And this is the takeaway. And that is that every single person does homework, right? That you don't just, here's what happens, okay? And I don't know what it is with me, or it's not just me, it's just other people that are good at speaking, right? I'm good at talking about this stuff, and people get like amazed. They're like, wow, this guy really knows what he's doing. This training is really good, right? And that's great. I really appreciate that. But the way to really take it home is to do your homework, right? And to go back and to study those price patterns, okay? And then to begin just forward testing them out, right? And to begin to forward testing them out. So right now, this is a really difficult one to trade, okay? And the reason why this is difficult is because this is we look at this is a really nice downtrend, right? Let's look at it. I mean, this is just solid, right? This is solid. But the reason I think this is difficult is because I am going to do some multi-time frame analysis here, and I'm going to look at a daily chart, okay? And this is XRP. And on a daily chart, what do we see? We see a big bullish candle that says if it breaks this channel, it's going right back up in an uptrend. So this is a lower, you do have to take multi-time frame analysis into consideration, right? So this is challenging because we have pin bar. On the daily, it's a very bullish signal, but on the lower time frame, the resistance is holding. Okay, so we have to say, what is it going to do here? So we got 2 fake outs. And what time frame? This is the hourly. Let's go to a 15-minute. And so as long as this structure holds, so here's the way that I'm gonna make my final decision. As this is a downward move right now, and so we have two sets of structure. We have the down structure and we have the up structure, which is here. So as long as this downward structure holds, even though it is a bullish uptrend on the daily, I'm going to honor the downward structure as long as it holds. So right now it has not officially broken yet. Okay, so I am going to honor that. Now, because these patterns look pretty good, I could take this trade right now, but I'm not going to, just because it's still a little bit indecisive. And so I'm going to wait. I think this could be a great short trade or a great long trade. I just don't know, and I don't want to let the market fake me out. So I'm going to wait for this level to break, or I'm going to wait for this upward level to break, right? And so I'm going to make that decision based off of that, and I'm not going to use these candlestick patterns, because the candlestick patterns are giving us mixed messages right now. They're telling us to go long and to go short. So before I close out, let's look at gold. Gold has a 3-day downtrend. It's in a downward channel, and it's the exact same scenario we were looking on at XRP, but this is a daily. So if we bring this up to an hourly, you can see we're starting to roll over a little bit, right? We're starting to roll over. Big bearish candle. It rejected right here, and I was really bullish just at the top of the hour. I didn't take a trade, but now I'm thinking, okay, maybe this is a downward move. We just broke this level, right? We just broke this level, and that's why this is really hard, right? That's why this is really hard. So now we have a bearish candle. We do have a lot of support here. We do have a lot of support right here. So I'm going to pull this back a little bit. Okay, I'm going to pull this back, and I'm going to be like, okay, I need more downward confirmation to trade this to the downside. I'm going to need this level to break pretty hard, which it's trying to right now. Like, it's actually trying to break. So this is a key level. If it breaks, I would expect it to bounce off of here. Okay, I would expect it to bounce, so we could go down, back up, and then down. And if this breaks, this is a big channel, so it could move down a little bit. It could come down here. It could come down here. There's a lot of different ways to trade this. All right, guys. That's it for today. And Sheldon, you can see this big thing here. That means gold. XAUUSD, that's gold. All right. Hopefully that was helpful. Get out there. If you like the training, hit the like button and make sure you subscribe. Really appreciate everybody. You guys had some great comments and feedback. Thank you so much, and we'll talk to you guys later. Thanks.